All right, let's get right into it. Today, we're going to demystify something that looks way more complicated than it actually is. We are going to learn how to read a daily stock market report, and believe it or not, we're going to do it in about 5 minutes.
You know the feeling, right? You open up a report, you're just looking for a simple update, and bam, you're staring at this wall of numbers and codes and jargon. It honestly feels like you need a special decoder ring just to figure out what happened.
Yeah, this is what I'm talking about. A page just jam-packed with data. It's totally understandable to just look at this and think, nope, not today, and close the tab. But I promise you, hidden inside all this noise is a really simple story, and I'm going to show you exactly how to find it.
Okay, so let's dive in. The very first thing you want to look for is the market's daily scorecard. Just think of it like the final score of a football game. All we need to know is, did the market have a winning day or a losing day? That's it. And to get that score, we look at what's called a stock index. The best way to think of an index is like the market's mood ring. It just takes a big group of important stocks, mushes them all together, and gives us one single number that tells us how they did as a team. It shows us if the market was feeling good, feeling bad, or just kind of meh.
So you'll see a number like this one, 21,676.30. This is the final closing value for the main index on this report, the All-Share Price Index for September 29, 2025. It's the final score. But on its own, a big number like this doesn't really tell you much, does it? We need some context.
And this little number is the context. This is the golden ticket. It's the percentage change from the day before. You can honestly ignore the huge number and just focus on this. The market went up by a tiny 0.36%. So what does that tell us? It was a quiet, slightly positive day. That's our first piece of the story. Simple, right?
Okay, so let's keep building the story. We know the market went up a little bit. The next logical question is, okay, but how much action was there? Who was actually doing all the buying and selling? It's time to follow the money.
For that, we're going to look for a number called turnover. Again, let's keep it super simple. If the stock market is just a giant store, the turnover is the total amount of money that went through the cash registers all day. It's the grand total of all the shares that were bought and sold.
And on this day, the total turnover was over 4.2 billion rupees. So think about that. Even though the overall market barely moved, there was still a massive amount of money changing hands. It was a pretty busy day at the shop. So, who was spending all this cash? Well, this chart makes it incredibly obvious. A whopping 98.3% of all that trading came from domestic or local investors. Foreign investors, they were just a tiny 1.7% sliver of the pie. This tells us a huge part of the story. Today's market mood was almost completely a local affair.
And what was that local mood? Well, if we zoom in on just the domestic investors, we can see they bought just a little bit more than they sold, 4.19 billion in buys versus 4.18 billion in sales. It's not a huge gap, but it does show a little bit of net optimism, which, you guessed it, lines up perfectly with that small 0.36% gain we saw earlier. The story is all starting to connect.
Okay, so big picture, the market was up a tiny bit, and it was local investors doing most of the trading. But the overall market is made up of hundreds of different companies. So let's ask, who were the real standouts of the day? Let's check out the biggest movers. This is where you can find some real fireworks. Even on a quiet day for the market overall, individual stocks can have wild swings. I mean, look at the top gainer here, industrial asphalts. It shot up 25% in a single day, and that shipping company right below it wasn't far behind. This tells you which specific pockets of the market were having a fantastic day.
Of course, you got to get the whole picture, so it's not always good news. We also take a quick peek at the top losers. One leasing company here, S&P Leasing, dropped by the maximum 25%. It's just a good reminder that risk and reward go hand in hand.
So, we have the market's direction, we know how busy it was, and we've seen the star players. We're almost done, but there's one more really important section in these reports that has nothing to do with the day's numbers. It's all about news coming directly from the companies themselves.
This is often called the corporate disclosures section, and this is where you find some really juicy info. A company might announce it's paying out a dividend, or maybe they've hired a new director. They might be releasing their earnings reports. These announcements are critical clues about the health and future of a company.
Okay, so let's put all of our clues together. We've looked at the big picture score, we've followed the money, we found the star performers, and we checked in on company news. We have successfully decoded the day's events. So, after all of that digging,
What's the actual narrative? What story did the market really tell us on this particular day?
Well, the story of the day is this. The market as a whole was pretty calm, ending just a little bit in the green. The day's action was almost entirely driven by local investors who were feeling just a tad more optimistic than pessimistic. And even though the average was quiet, some specific stocks and sectors like industrial and shipping had huge wins. See? Not so scary. It's not a wall of data, it's a story.
And there you have it. You now have the framework. You have the keys to find the story in the numbers any day you want. That wall of data isn't so intimidating anymore because now you know exactly where to look. So, the only real question is, what story are you going to see the market tell tomorrow?